The efficiency revolution is the historic mobilization of human ingenuity and imagination to help us reduce our consumption of finite resources and reduce the impact on the planet. We think we're still in the early days of the efficiency revolution. Over the past 8 years, our portfolio has been able to slightly outperform the broadest global indexes. And most think this is due to the high growth areas of renewable energy, wind and particularly solar. And this is partially true, but when we look at the portfolio, the real drivers of performance have come from companies who have participated in the efficiency revolution. And we think there are many years of outperformance for these companies to come. If you were the manager of an industrial business in the past century, one thing you could count on was steady input commodity prices. But something changed around the turn of the century. In the past 10 years, we've seen the price of commodities like corn and copper and electricity increase over 200%. In the case of oil, it's up over 500%. The question is, as we add 2.5 billion new consumers to the global economy in the next 20 years, and the cost for extracting these resources continues to increase, will the global economy be able to adjust? We think part of the solution has to be efficiency. So the question is, can the global economy adjust to this new reality? We believe the answer is yes and no. Like all revolutions, this will create winners and losers.
If you look at where energy is consumed, and more to the point where it's wasted, it is easy to identify efficiency revolution themes. There are many, but here are 5. Electric grid transformation is the first. Second, transportation. Third, building construction and operation. Fourth, manufacturing processes. And fifth, food production, transportation, and storage. In most of these themes, heat loss is by far the biggest area of energy waste, adding to the demands on combustion engines, turbines, and HVAC systems. Technologies that facilitate the capture and productive reuse of that heat can improve overall efficiency by as much as 50%. In the industrial sector, as well as some heating and household appliances, electric motors are the biggest energy consumer. Switching from fixed-speed motors to variable-speed motors can save more than 20% on energy demand. And there are myriad other technological breakthroughs happening in transportation, lighting, building materials, and elsewhere.
Investing in efficiency is investing in most parts of the global economy. We avoid upstream oil and gas producers and have little exposure to sectors like finance and healthcare and consumer discretionary. But when we look at our portfolio, we're able to get exposure to most industrial sectors.
First among the losers will be those whose business models rely on an unending cheap supply of natural resources. Just as earlier industrial revolutions changed the economics for industries like the textile guilds and whaling, the 21st century industrial revolution will threaten producers of dirty sources of energy and intensive users of water, or those who sell products that are intended to be replaced after a short lifespan. More indirectly, as the world commits more of its productivity towards renewing its infrastructure and improving efficiency, less will be available in the intermediate term for discretionary consumption of consumer goods.
I believe investors can remain diversified, increase investment returns, and decrease risk betting on efficiency.